Welcome to the Techno Fundamental Report for October 30th. Kind of continuing our theme here, the big money is not in buying or selling, but in the waiting. Charlie Munger. You know, the fear of missing out is a big issue. I have to deal with it every day because you don't want to miss the big move, but you have to have patience. You need patience, discipline, and agility to take losses and adversity without going crazy. Again, Charlie Munger. This isn't baseball. You don't have just 3 strikes to get on base. You can wait for that fat pitch. So this is all about waiting for the proper setup, and we'll talk a little bit more about that. Now, you know, as I look at Bitcoin, and I've really struggled with this for years now, I really just cannot understand Bitcoin. Now, I may be in left field, and a lot of people like it, but it kind of reminds me of the Dutch tulip bulb market bubble. The famous market bubble and crash in Holland during the 1600s when speculation drove the value of tulips to extremes. In other words, they were just tulips. It just didn't make any sense. So I kind of feel the same way about Bitcoin. Now, if you also go back and remember the Nifty 50 back in the 1970s, and here's a listing of them, you can see a lot of them are still around, but some of them aren't. And they've been merged and so forth. But you get into these periods of time where people get extreme about something, and in my opinion, just doesn't make any sense. But that's just me. Earnings season. We're in earnings season. Very important. We're seeing a lot of earnings reports coming out, some good, some bad. But what's important about earnings season is, first of all, you can determine the financial health of your company. You know, you get an updated income statement, you get an updated balance sheet. You can kind of take a snapshot of how your company is doing. But most important is the future outlook, because the companies will provide guidance for the next quarter and the following year. I find that the guidance tends to be pretty important. So earnings season is here, and just be aware of the fact that it's all about the health of your company and the outlook of how their earnings and revenues look. Now, don't fight the tape. Now, I have to really fight with this because I get involved in a lot of mathematics. And the tape rules, the ticker tape rules, the trend rules. Now, I want to mention something called the line of least resistance, or the path of least resistance. It refers to the easiest course of action, even if it isn't the best or most honorable option. In other words, when you look at water, water tends to have a tendency to flow downhill due to gravity. So when you start looking at companies to invest in, and you look at them technically, you want to look at the line of least resistance. Now, let's take Apple as an example here. You have a trading range here, roughly 255 to 265. So the stock is trading in that range. Now, the line of least resistance would be here or here. So positively, Apple has broken the line of least resistance and is moving upward, and it's actually starting to trend somewhat. Let's look at an example of a negative least resistance. So in other words, with GE Vernova, you had a line of least resistance around 580-ish, and on the upside would be about 630. So you would say, okay, well, I'm going to wait for the setup and see which line of resistance. In other words, are the sellers taking control or are the buyers taking control? Now, this may be just a short-term thing, but the line of least resistance has definitely broken down. Now, here's NVIDIA, and I have to disclose we do own the stock. So you can see it's been locked in a trading range, roughly 178, say to 192. So you had this period of time here where it just pretty much consolidated, pretty much for an extensive period of time. Now, just the other day, it broke out to the upside. So the buyers have taken control here. So the line of least resistance would be this breakout right here. So looks good. So let's talk about the indexes. NASDAQ making new highs, very strong uptrend. Really looks good. Now, if we look at the mid-cap stocks, so let's spread out a little bit. Now, I think a bad habit is only watching the Dow Jones Industrial Average. That is 30 industrial. Excuse me, I have to end my car. In other words, that's 30 industrial cyclical companies. So it's just really not the best way to go. So we're looking at the S&P 400, which is the mid-cap stocks, kind of struggling in here. Then if we look at the New York Stock Exchange, same thing, not making new highs. Now, you noticed on the NASDAQ making new highs. Now, realize that without technology spending, the GDP growth rate would be either around zero or negative. So everything's pretty much boiling down to technology here. Now, here are the small caps. Again, you can see where the small caps have broken out, but then again, failing again. Now, the small caps need to get going, but so far that's just not happening. So if you look under the hood here, yes, the S&P and the NASDAQ are doing well, but that's not everything. So here's the S&P. Again, just like the NASDAQ, you've got a strong breakout, strong uptrend, and the primary trend continues to be up. So you're above the 200-day moving average on both the S&P and the NASDAQ. So how do you deal with this? Basically, just be aware of the fact that the market is really not broadening out like we would like. Now, the aggression index is where we compare the NASDAQ to the consumer staples, and you can see robust move here. Very positive. So this is a great indicator. I've been using it for years, and it's telling you to be aggressive right now. So hopefully this continues. Now, I did want to mention gold a little bit. Now, you can see here with gold, I've compared gold to the NASDAQ going back 20 years. And you can see that gold has underperformed and is in a long-term downtrend compared to the NASDAQ. So in other words, you'd be better off in the NASDAQ than gold. Now, here in the short term, we've had a rally in gold. But if you notice here, it's hit that trend line, is basically pulling back, so it's starting to somewhat fail. So I would be very cautious about gold. It's a long-term dog, but maybe in the short run it had a bounce, but it just doesn't look like it's going to follow through. So if you have any questions, please let me know. Thank you very much.